This is Rod Kusanen, Spooman for Risk on June the 7th, 2019, all times on the chart or Central Standard Time. Why do we run SPY when it comes to the composite market profile? In our last video, we showed you how to set up the composite market profile properly. In this video, we want you to understand why it's so important to run both data feeds. Today, as the market was rallying up strongly, we had a value area at 28.69, and above that an additional 28.79.25. It blew right through the first level, and when it came to the second level, it blew through that as well. And then it stopped. Why did it stop? Look over at SPY. SPY shows a value area at 288.77. 288.77. And incidentally, that let's just take a look at where that came from. This is based upon the low pivot of October 25th, 2018. Okay. So that number was very important, and as we blew through these lower value areas, we didn't stop and reverse until we got up here. That's why you need to run it. When you're looking at where this market is liable to pivot, if you don't have this alternate data feed running side by side, you're very liable to make a bad decision about where to pull your profits or reverse. Now, we not only pulled our profits, but we reversed, and now we're doing quite well on the way back down. All the same, if you just run it side by side, you're liable to find yourself being a bit more patient with the market when it comes to anticipating where it's liable to pivot. And this has happened all through the course of this rally up. We're running the SPY, from that low just a couple of days ago, and you can see where these levels were all the way up till today. So that's the point of this video. Now let's just take a look at the premium and what was happening to the premium. This is just a very broad 1-minute chart. That'll give you a good idea. Obviously, here, as the market rallied up, we don't want to get out yet. This is still a very good, strong indication that the market is continuing to move up. Now, when you're using the moving average on the SINX, all right, one thing that we've noticed that you need to keep in mind in reading the moving average is you need to let it cycle through. In other words, if you get a big move up, let's just say it's this move up here. This is your first move up from yesterday. All right, then we pivot. You're not going to get out just because the slope of the moving average has gone negative. You want to wait until it goes up to the next level and then see whether or not you are divergent on the next move up. Now, there wasn't much divergence here. There was a little bit, and you did see evidence that this market might be coming down because of these new lows on the premium here. So you might have gone short there, and of course, the high was over here. Now, this is a 1-minute chart, so I'm not going to put too much credence into where you're going to pull the trade. The point of the discussion is to look at how the moving average cycles. Now we come up to this point here, all right? And we're only slightly lower than we were here. But we've got some indications that this market needs to come back down and test some price levels here based on the new lows on the premium. So we might have gone into a short in and around this area. Now as the market turns again and we move up, this is obviously not where we're going to take a short. In fact, if anything, we want to get long again. But now that we've moved up, look at where the moving average is here at the top of the move. We've got a much more obvious divergence, and there's the time to take the short. That's the point. I'm Rod Kusin and Spooman for Risk.